On this episode of After Earnings, Everpure, the newly rebranded data platform company aiming to position itself at the center of enterprise AI by transforming fragmented, ungoverned data into AI-ready information. I'm joined by Charles Giancarlo, CEO and Chairman of Everpure, to discuss the transition beyond flash storage, the company's investments in sales and marketing amid the war for sales talent, and supply chain challenges in the face of tariffs and rising memory costs. Let's get into it. So Charlie, welcome. Congratulations on a very strong set of recent results. But to set the stage for the performance, if you don't mind, break down for us in layperson's terms the actual product suite of Everpure, because it has changed over time.
Yes. Well, at its simplest level, we produce equipment that stores data. Now, as everyone knows, data is becoming coming much more into the news because it's being used for things such as AI and so forth. But data has always been, in fact, collected, since the very beginning of the compute environment. Actually, well before that, you can go back into, prehistory, where data, largely around economics, was stored on clay tablets. And a lot of the data that is stored today is the equivalent, which is, every time you pay for something with your credit card, data is collected, not just the payment, but often, where you purchased and what you purchased and so forth. And companies keep this data in order to, first of all, run their business, which is very, very critical. But now, as we get into the age of AI, they're looking for, that extra bit of information, of insight into how their customers behave. So at the end of the day, today, a lot of people say, well, I store my photos or whatever in the cloud. Mm-hmm. Well, I hope they understand that at some point it actually lands on a piece of equipment that actually physically stores the data. And that's the type of equipment that we make. Now, we're one of the newer, even at over 15 years old now, we're one of the newer players. What makes us unique is that we were really the first company that switched for large-scale company systems, that switched from storing data on hard disks to storing it on flash. Mm-hmm. Flash is a semiconductor, and customers will know that now because they'll have something inside their laptops or computers called an SSD, which is a solid-state device. It means flash. It's storing flash. And because we were first, we did some very unique things with flash. One is flash used to be very, very expensive. Yeah. And so we had to allow the data to be much less expensive when stored on flash. And we did that by removing redundancy. It's called data compression. But if you store the same file twice, well, you don't really need to store it twice. You just need to indicate that it was stored in two different places, but you could store it once. And that's an example of data reduction. You take things that are similar. You just store it once rather than many times. But you have to keep track of all those different instances. Another thing that we did was instead of using SSDs, which make flash look like a hard disk, we use what's called raw flash. We use flash the way that it should be used. So let's flash forward, pun intended, yes, to exactly. Today. What we produce, as the newest vendor, there are lots of different types of storage. Yeah. There's high-performance storage, which tends to be more expensive. There's cheap storage for things like silly cat videos. And there is large-scale and small-scale, and there are different formats. We do it all with one software environment. We do produce equipment, but the most important thing is we're able to produce that wide range of different types of storage technologies with one software environment. That's been very important. One last thing that I'll mention before we move on is that up until now, data storage inside of corporations was not treated like a cloud. It was treated like individual silos of data for different applications. Our latest software now allows the corporation to see all of their data across their global environment as a cloud of data. Mm-hmm. And so that allows companies to make their own clouds, not necessarily have to use or can use in conjunction with clouds like Amazon or Azure or Google, for example.
And so just to paint the picture of your client base, Charlie, just talk to us, how much of it is it large enterprises? How much is it the small and medium-sized business population? Just paint the picture for us as to who it is leaning into your products.
Yeah, we're approximately 50-50 between large scale, you can think Global 2000, Fortune 500, and I wouldn't call it small business, but medium-sized business. We call it commercial business. Every business, frankly, has to have data stores that, in order to be able to manage, any modern business manages not with pencil and paper and not with spreadsheets, but rather with more modern systems that require high performance and highly reliable storage.
So you've evolved the business, and we'll talk in a moment about how you've done it, and acquisitions have been a large part of the journey. But you've evolved from storage to now software, as you said, that enables corporations to sort of see what they have available, the pool. How involved are you in the actual cleanup of data to make sure that it is ready and able to be utilized, to be read, and to be fed into the most sophisticated other software out there, or AI models that corporations increasingly are trying to figure out how to utilize?
Yeah, this is a really quite an interesting area, and one that hadn't been explored before. If you were to speak with the technical leaders of the companies that are the furthest ahead in terms of thinking about AI, so I'm talking about enterprise companies that now want to use AI to glean insights out of their data. What they'll come to you and say is, actually, the AI right now is not the problem. The problem is that our data is not ready to be used for AI.
Yep.
And so let me explain that. Data that's used for operational systems, and I mentioned credit cards, for example, credit card swipes. Well, that data is stored as things like $20 and, this good and, this store. But it's not really all brought together to make it, what AI needs is information, not data, not individual bits of data, right? And that information has to be data that is curated and brought together, both for training or for what's called inference. And that takes weeks or months even by organizations. It takes a lot of manpower or people power. It takes software to align that. And whenever it takes weeks or months, you're now working on old information, not the latest real-time information. So our most recent acquisition, a company called OneTouch, and some of the things that we've been doing internally, that project we called Fusion, allows companies now, as they are getting their real-time data, to have additional information put to that data so it looks like information, that it looks like the context that's required for it to be used immediately by AI. And so this is a big deal. Someone once described AI as automating the chef in a restaurant, right? The chef has recipes that they know very well, so they can put recipes together. What we're doing really is preparing the ingredients for the recipes. The ingredients come in as raw vegetables, whole fish, and sides of beef. And then you have a whole group of sous chefs whose job it is to wash the vegetables, prepare, butcher the meats, and get it all ready for the recipes. That's what we're really working on, is making it easier for AI to do its job of preparing the recipes.
So let's talk about your growth, Charlie, because what you've described is so top of mind for pretty much any company, certainly that we speak to here at After Earnings. You see that in your latest earnings, we saw that your Q4 revenue is up 20% year over year. You hit $1.1 billion. Your subscription revenue, which is what gets us most excited as investors, of course, up 15% to $1.7 billion. When you think about your growth outlook for 2026 and beyond, do you see that growth accelerating? What's the trend that you are starting to see the foundation being laid for at this moment?
Yeah, thank you for asking. So we do see it as accelerating. We're in because our fiscal year ends at the end of January, we're in our FY27 already. We projected 28% growth in Q1 and roughly 20% growth for the year as a whole, which is a significant acceleration over last year. We're expecting subscriptions to continue to increase even faster than our perpetual sales, our CapEx sales of equipment. And we are expecting more and more of our revenue to be coming from pure software rather than, well, the hardware will continue to grow, but the pure software part or the subscription part of our business is growing even faster. So we're very excited about that. We're excited about the fact that we're the only business in storage outside of the cloud vendors themselves that are growing in strong double digits. And a lot of that is just taking share in our market because of our modern approach.
And in terms of the approach, you've changed your name. The company's just gone through a rebrand, partly to reflect that shift. Talk to us about that. Talk about that decision.
You know, rebrands, one needs to be very thoughtful and careful about, because they should be for business purposes, first of all, not for ego. They should really reflect where a company is and is going, right? And our first name, Pure Storage, served us very well for the first 15 years when really what we were focused on was covering the data storage estate for enterprise customers. But now we are increasingly, our value add is increasingly adding data management. And data management, in our business, interestingly, data is typically handled and managed by people that are different than the people that are managing the physical storage.
Yes.
And we needed to signal to them, to different personas in our customer base, that we are, that now we have value in a number of different areas, including cybersecurity, that is different and above just the data storage environment. And we felt that given the capabilities that we put in the last couple of years, and given the acquisition of OneTouch, this was a strong signal. We wanted to send a strong signal that now we are extending beyond storage.
Growing a business has never been easy. If it were, spreadsheets would be optional and stress would be a hobby. Whether you're navigating a complex industry or actively trying to reinvent one, KeyBank brings a deep bench of banking experts who collaborate on market-proven solutions. They're not just here for the business you're running today, they're here for the one you're building toward next. Reimagine business as usual, KeyBank opens doors. Learn more at key.com/B2B. That's key.com/B2B. You've also been investing organically in expanding your capabilities, Charlie. You've done the big acquisition. Just as a note for folks listening, you've done other acquisitions in the past. But R&D is one of your biggest areas of investment. And I just want to look at some of these numbers. For fiscal year 2025, you had over $800 million of spend. That was up from $737 million the year before, which in turn was up from $693. So you can see huge amounts of reinvestment. It certainly is a percentage of your revenue. Cybersecurity is obviously an area you're focused on. What else is coming out of your R&D? Brains?
Well, so I really want to point this out because I think it's the thing that really differentiates us at the core, the root cause, if you will, of our success is the fact that we looked at data storage and data management differently from the major competitors in this market. Mm-hmm. For so many years, data storage, data management was looked at as a commodity. I just want the cheapest that gets me the features that I need, was the way that customers and frankly, the vendors would think about it. And so if you're a vendor and you believe that what you're selling is a commodity, how do you manage that financially? Yeah. Well, you invest as little as possible. Right, and including in the R&D side. We now, as of this year, we will invest more dollars in data storage, data management, R&D than any one of our competitors. And some of them are, we're now the third largest, but we'll invest more than the largest competitor in the business in R&D. And most of our growth is coming from our organic investment. And that organic investment now is not only spread across, our data storage estate, but increasingly into this data management area as well. And I think that's what's allowed us to grow faster than anyone else. Our view is, look, we're in the high-tech business. Data centers continue to scale, networking and compute continues to scale. And if storage didn't follow suit, then it opened up the opportunity for someone like us that's investing in it heavily from an R&D standpoint. So we're very proud of where we are. We're going to continue that strategy of investing and hopefully reaping the rewards of strong investments in R&D.
There's been another area in your cost structure that has seen an increase in expense load over time, Charlie, and that's in your sales and marketing, which went up about $120 million over sort of a 3-year fiscal period. Why is that? What was driving that increase?
Well, sales and marketing, of course, really does follow sales. Now, you like to get more productivity year by year, but as you address more customers, as you are fulfilling more and more of those customer needs across their business, you need people in our sales and marketing organization that really can operate as partners to our customers. We're not selling, well, I don't mean to insult any industry, but we're not selling paper clips or, we're selling, really high-tech equipment that needs to be thoughtfully integrated in a way that a company operates in their IT environment. And so our sales staff, our sales engineering staff, our professional services staff work very closely, with the technical experts in the customer, by the way, financially as well, to really fit both their technical model, their technical architecture, where they want to go, as well as their financial model, that it can be very different company to company, to make sure that we're really doing the best we can for them. Something I want to mention is that probably the most important number in the company is our Net Promoter Score, which is a industry-leading 84. Now, I'll save you the long explanation of what Net Promoter Score is, but this is a ranking of whether your customers actually promote you to other customers. And so it goes from -100 to 100, and 84 is an extremely high score. And it's everything that we do, it's the quality of our products, it's the quality of the way we interact with our customers, and it's the value that they see from us as a company as a whole that gets us that score. So the sales and marketing team is, let's say, the spear point there in terms of the people that the customer interacts with every day. And we want to make sure that we are always the best vendor that our customers see.
It's interesting. We hear so much in the dialogue around technology and the growth for businesses such as yours. And Charlie, everyone talks about the war for AI talent. But what I keep hearing is more and more demand for this kind of consultative sales skill that you just described. And other folks like Salesforce, for example, while they are reducing headcount because they're able to use AI for productivity, sales is another place that they're looking to actually increase headcount. How are you finding the war for sales talent? And how are you able to attract the kinds of folks who, frankly, everyone broadly described in the B2B enterprise sector seems to be going after right now?
Well, you have to have a value proposition that speaks to them. And I believe culture is very important as well. People want to work with people that they want to work with, where they feel satisfied in their career, but also feel like they're part of, if not a family, well, at least among colleagues that they enjoy working with. We're very conscious of our culture. On the one hand, we do treat people, extremely well. We work together collaboratively. On the other hand, we expect a lot of one another. And so every organization, as you well know, is a self-selecting culture. So you need to make sure that we need to make sure that we have both the high expectations, but that we also don't treat people like machines. We don't treat them like, dismissively. We are all part of one team, and we have one mission. And there are the kind of people that we want enjoy that culture. And so I think the two really work very well together.
And in terms of who you are competing against, you've got the hyperscalers, you've got data platform vendors, Charlie, you've got sort of other players out there. When you think about where you can focus and win to drive this growth, where your salespeople effectively have the greatest success, where is it in that landscape of data providers?
Well, we want to help customers regardless of whether they want to store their data on-prem, on their own premise, or in the cloud. And we also are looking for where can we uniquely solve problems. One doesn't choose to go head to head, with companies or industries that are already particularly strong. So there are a lot of vendors that are in this AI analysis of data, doing that. instead of going directly into that, we want to help those companies by having data that is more, where the data is already prepared to be used. And companies want this as well, which is really quite interesting. If the data that they're storing now has been prepared to be used for AI, right? So this is the idea of the sous chefs, everything all cleaned and ready to go. Well, then they can choose, a hyperscaler chef, or they can choose an on-prem, software chef for the AI analysis. It really gives the organizations power as to who they use for their AI, right? They can choose any one of the AI clouds. They can choose any one of the hyperscalers, and they can change their mind on a daily, weekly basis. So it gives more power to the customers, which of course they like. And it makes it, we believe that our solution will make it less expensive for them also to be able to get the results from AI that they're looking for.
Can we touch for a moment on equipment, Charlie? Can we just talk about the cost of memory? Because when we take a look at that over the last year, and just from our perspective, we talk about SanDisk, for example, and you see what an extraordinary run, more than 100% run up, because the cost of memory has gone up, the demand for memory is so strong. How are you managing that area of your cost structure?
Well, supply chain has been in, just terrible dynamic, and unpredictable situation now ever since COVID. And we thought COVID was a once in a decade situation, and now we've had two more. We've had tariffs, and now we have this incredible supply chain demand crunch because of AI. So we've always had a very diversified supply chain, which is very important. We've had very strong relationships with our suppliers, which in times of trouble turns out to be very, very important as well for us to be able to work with our suppliers. I would say now is probably the most challenging time that I have literally ever seen in many decades in the business from a supply chain standpoint. So those relationships are very critical. The fact that we are a manufacturer using raw NAND. We design all of our own equipment. So many organizations, many of our competitors assemble their equipment from parts such as servers, SSDs, and other things. And those assembled parts are, I believe, more challenging for them to be able to supply against. In our case, and we did this during COVID, we've had to redesign equipment to take advantage of parts we could get when parts that we had already designed for became unavailable. So it keeps our engineers very busy, keeps our supply chain and procurement people very busy. But it's just something that you have to manage, frankly, on a daily and weekly basis. So.
And Charlie, I'm curious, what proportion of your supply chain is actually here in the US? So when you think about trying to source memory, I'm just trying to get a sense from a real practitioner, an expert here.
Yes.
How much is the US actually providing of this critical area of the AI supply chain here and is domestically sourced?
Well, we do have, the U.S. has Micron, which produces its memory and flash components and other things as well here in the U.S. We have Intel that is also in the U.S., but a lot of semiconductors come from overseas. That's very important, mostly from the Far East, and Taiwan, Japan, et cetera. So coming back to us for the moment, we do final assembly 4 places around the world, including Houston, which is in the U.S. We supply sub-assemblies largely from Southeast Asia, a lot of it from Vietnam, but from other areas as well. And so this gives us, and so between the sub-assemblies coming from quite a few countries, the final assembly coming from 4 different regions around the world, Mexico, U.S., Czech Republic, and again, Vietnam, it really gives us a very broad base upon which to leverage. That was very important in the case of tariffs. We'd have to switch shipping routes for various different things to minimize the cost to our customers. And in this environment, again, the ability to be able to change vendors, with our engineering expertise becomes very important if parts become unavailable.
My last question for you, Charlie, is about your share price. People always hate talking about their share price because it's in many ways, the market's going to do what the market's going to do. If you look over the last 12 months, Everpure has had a pretty good run. If you look year to date, as of today, filming on the 9th, down just under 10%. What do you say to investors when you look at that? You've just had this great set of earnings results. You've just described great growth strategy. How do you say to them, look, cut through the noise and this down 10% is not the key signal to look at?
Well, Warren Buffett had a great quote, which was that in the short term, the market is a voting machine, and in the long term, it's a weighing machine. And so, what the investors should weigh us. Are we making progress in our business, both from a growth top line standpoint and in a bottom line standpoint? We're roughly $4 billion today. We operate in a 40 billion minimum market, maybe a 50 billion market, and we're picking up share. We consistently pick up share. Every quarter or every year rather, we consistently improve our profitability. The operating profit. Every single year. So they should really look at our fundamentals. We more recently, we've become quite a speculative stock because we've started selling some of our technology into the hyperscalers themselves, which can be very rich for us. But then it invites speculators to bet on whether or not we get the very next hyperscaler and then the next one. And because of that, unfortunately, there's a high beta in our stock at the moment. But that'll pass as well as we achieve more and more success. So look at us as a weighing machine. I will say we have the best set of long-term investors I've ever seen at a company. We've had investors for over 10 years that have stayed with us through thick and thin over many years. They literally cheer us on. They look past the short-term swings and really are part of our fundamental strategy. They follow our strategy. And I have to say that I'm really quite pleased and proud and honored to be able to work with them to continue to improve, to improve the value that they get out of Pure.
And Charlie, just as your cash flow has increased over time for fiscal year 2026, your operating cash flow up at $880 million, that I assume will grow as you continue to scale the way you've described. Have your long-term investors expressed to you any preference about how you use that cash flow?
They've actually been cheering us on, both with respect to our acquisitions, and we're quite thoughtful and careful about our acquisition strategy. And of course, we've been returning a lot of that through share buybacks. So we do that on a fairly consistent basis. And then we just want to leave enough cash in the business to weather any storm any economic storm that might come our way. So there's been, right now, I think they believe that we have roughly the right amount of cash in the business, that we're returning it in the right way.
Charlie Giancarlo, CEO and Chairman of Everpure, thank you for joining. Good luck executing. It's a big year for you. Please come back. Thank you.
Thank you, Anne. It's been a pleasure.
I'm Anne Berry. Thank you for tuning into After Earnings, the show that brings you up close and personal with the executives behind the world's most interesting publicly traded companies. If you learned something today, don't forget to like, subscribe, and share with your friends. Our upcoming episodes will feature CEOs and CFOs from Snowflake, Lucid, Duolingo, and many more. We'll see you next time.